Hey everyone, ready for another deep dive. Today we're tackling crypto investing.
Sounds exciting.
It is. And to guide us, we've got excerpts from Cryptocurrency Investing for Dummies. We're going to break it all down, give you a solid foundation.
Yeah, this book is a great place to start, especially because the crypto world is huge GE now. I mean, there are over 2,000 different cryptocurrencies out there.
Right, it's not just Bitcoin anymore, it's a whole universe of digital assets.
It really is.
You know, one thing that really jumped out at me in the book were those crazy returns. Like, Bitcoin gained over 1,300% back in 2017.
Oh yeah, that was a wild ride.
But then you've got Ripple gaining over 36,000%. It makes you wonder, like, is this the future of investing?
Those numbers are definitely eye-catching, but we gotta remember the 2018 crash too.
Oh, yeah, that was rough.
Crypto's super volatile. Those huge gains, they're not the norm, and the market can swing like crazy.
So a long-term strategy and understanding the risks is key.
Absolutely.
Okay, before we get too deep, let's back up a bit. What exactly is a cryptocurrency? We hear the term all the time, but what does it actually mean?
Well, the book describes it as a kind of hybrid part asset like stocks and part currency like dollars.
Interesting. So it has traits of both.
Yeah, which can make it a bit tricky to grasp at first. And what really sets crypto apart is that traditional ways of measuring value, they don't quite apply because most cryptocurrencies are decentralized.
Okay, decentralized. Let's unpack that. So instead of like a government or a bank controlling things, it's more like the people are in charge.
Exactly. Think about it this way. The dollars in your wallet, that's what's called fiat currency.
Fiat currency.
Yeah. It has value because the government says it does. Crypto flips that idea on its head.
That makes you think about the whole concept of value and trust, right?
For sure.
So why should someone consider investing in crypto?
Well, it's definitely not a get-rich-quick scheme.
Right. The book makes that clear.
You need patience, strategy, and a little bit of a risk-taker's spirit.
Speaking of which, the book talks about diversifying your investment portfolio.
Hmm.
So adding crypto could be a way to branch out from traditional investments like stocks and bonds.
Exactly. That's one of the big potential benefits. And of course, there's the potential for capital appreciation. You know, those incredible returns we mentioned earlier.
Yeah, those are pretty mind-blowing.
Like NXT had a return of 697,295%. Ethereum, 160,100%. And IOTA, a whopping 282,300%. You won't see those kinds of numbers with traditional investments.
But high returns, high risk, right?
Absolutely. The book puts it this way. Don't be so scared of risk that you never leave the house. But don't go betting the farm either.
Makes sense. So let's talk about some of those risks. Volatility seems to be a major one.
Oh, for sure. Crypto prices can swing wildly. Like Bitcoin in 2017, it went up to almost $20,000 and then crashed hard.
Ouch.
Even experienced investors get nervous with that kind of roller coaster ride.
And then there's the whole regulation issue.
Yeah.
Feels like the crypto world is still the Wild West, right?
Kind of, yeah. Regulations are still being developed, so it's super important to stay informed. Things can change quickly.
And we can't forget about security risks. Hacking, scams, those are always concerns in the digital world.
Right. The book emphasizes secure wallets, hardware, or paper wallets instead of just relying on online exchanges.
Gotcha. So securing your crypto is just as important as picking the right investments.
Absolutely. And before we move on to actually how to invest, I think it's crucial to understand blockchain. That's the revolutionary technology that makes crypto possible.
Blockchain. Honestly, it's always been a bit of a mystery to me.
Imagine a special, super secure digital ledger. That's basically what blockchain is.
Okay.
Yeah.
So it's like a digital record of transactions.
Yes. And it's designed to be virtually tamper-proof. Each block in the chain holds data about transactions, and they're linked together in chronological order.
So if someone tries to change something in one block, it messes up the whole chain.
Exactly. That's what makes it so secure. And remember decentralization. Blockchain takes it even further. Instead of one central authority, the information is spread across tons of computers.
So it's like a million accountants all double-checking each other's work.
Yeah.
No one can cheat the system.
That's a great way to put it. Now, with blockchain in mind, let's move on to the practical stuff. How to buy and sell these cryptocurrencies. That's where exchanges come in.
Exchanges. Those are like the stock markets of the crypto, right?
Precisely. Cryptocurrency exchanges are online platforms where you can buy, sell, and trade different cryptocurrencies. Some are more centralized, like traditional financial institutions, while others are decentralized, embracing the true crypto spirit.
And the book mentioned different types of pairings, like crypto to crypto and fiat to crypto.
Right. So you can trade one cryptocurrency for another, like Bitcoin for Ethereum, that's crypto to crypto.
Got it.
Or you can exchange regular currency, like dollars, for cryptocurrency. That's fiat to crypto.
Okay, that makes sense. But there are so many exchanges out there. How do you choose the right one?
That's a great question, and something we'll definitely explore in more detail later. But first, there's one more essential element: wallets.
Ah, yes, wallets. That's where we keep our precious crypto safe, right?
Hey,
I remember the book mentioned different types of wallets with different levels of security.
you got it. Think of a wallet as your personal vault for your crypto. There are online wallets, which are convenient but less secure.
Okay.
Then there are software wallets, which you download to your computer. And then there are hardware wallets. Those are considered the most secure because they store your crypto offline on a physical device.
So, like choosing between a digital piggy bank, a safe in your house,
Yeah.
or a vault at Fort Knox.
Exactly. The key is to find the right balance of security and convenience for you.
Makes sense. But before we get into the details of wallets and exchanges, let's take a step back. I mean, we've talked about Bitcoin and Ethereum, but there are thousands of cryptocurrencies out there. How do we even begin to navigate that?
Don't worry, we'll guide you through it. We'll start by looking at some of the major players. Based on their market capitalization, that's the total value of all the coins in circulation. So first up, we've got Bitcoin, the original cryptocurrency.
Bitcoin, a legend. It's like the digital gold everyone talks about.
Then there's Ethereum. It's more than just a currency. It's a platform for decentralized applications and smart contracts. Think of it as a blockchain with superpowers.
Wow, that sounds incredibly powerful.
It is. And then you've got Ripple, aiming to revolutionize international payments, making them faster and cheaper. They're particularly focused on working with financial institutions.
So Bitcoin is like digital gold. Ethereum is like a decentralized app store, and Ripple is aimed to be the backbone of global finance. That's fascinating.
Exactly. And finally, we've got Litecoin. It's designed to be a faster and more lightweight version of Bitcoin. Think of it as Bitcoin's speedy little brother.
Okay, so we've got Bitcoin, the OG, Ethereum, the platform, Ripple, the global network, and Litecoin, the speedster. Now, with all these options, how do we choose which ones to invest in?
That's where things get really interesting. We'll explore different investment strategies, delve into short-term trading, and learn how to manage a crypto portfolio like a pro. But first, let's take a quick break.
Welcome back. So, we've explored what cryptocurrency is. We talked about blockchain, all that good stuff. Now I'm thinking, how do we actually get involved in this crypto world?
Well, there's more than one way to dip your toes in, right?
Oh, interesting. Tell me more.
The book talks about some alternative approaches, like investing in stocks and ETFs that have exposure to the crypto market.
Ah, so instead of buying Bitcoin directly, you can invest in companies involved in the crypto ecosystem.
Exactly. Think of companies developing blockchain tech, running exchanges, or providing mining services.
Okay, I see. So you're betting on the success of crypto, but in a more indirect way.
Right. The book actually mentions Overstock as an example. They started accepting Bitcoin back in 2017, and their stock price kind of mirrored Bitcoin's movements.
Oh, yeah, I remember that. It went up when Bitcoin went up, crashed when Bitcoin crashed.
Exactly. So there's a clear correlation there.
Makes sense. What about those blockchain ETFs? You mentioned those earlier, right?
Yeah, blockchain ETFs, those are like baskets of stocks that track a bunch of companies involved in blockchain technology.
Ah, so instead of picking individual stocks, I could get exposure to a whole range of them with an ETF.
Exactly. It's a good way to diversify. The book mentions a couple that were around in 2018, BLCN and KOIN.
I'll have to look those up, see what's out there now.
Definitely. The ETF landscape is always changing, so do your research. Now, beyond stocks and ETFs, there's also something called cryptocurrency futures and options.
Oh, yeah, I vaguely remember reading about those. They always seemed a bit complicated.
They can be, yeah. It's more for experienced traders, people with a high-risk tolerance.
So maybe not for beginners.
Probably not. Better to stick with the basics. Direct crypto investments, stocks, ETFs.
Baby steps. I like it. But something I've always wondered is, how is the value of a cryptocurrency even determined?
Good question. It's not like there's a central bank setting interest rates, right?
Yeah, that's what I was thinking. So how does Bitcoin or any cryptocurrency get its value?
It's a whole mix of factors, but supply and demand is huge. If more people want to buy than sell, the price goes up, just like anything else.
Right, basic economics, anything else.
Definitely. Media attention, public sentiment, Positive news can create hype and drive up demand. Negative news can trigger a sell-off.
It's like a popularity contest, but with real money on the line.
Pretty much. Also, technological advancements. If a cryptocurrency introduces some groundbreaking new feature, it can boost its value.
So keeping up with the tech developments is crucial.
Absolutely. And of course, government regulations play a role. Positive regulations can boost confidence. Negative ones can have the opposite effect.
Sounds like crypto investing requires understanding tech, economics, politics, even social trends.
It's a multifaceted world for sure. And then you always have unexpected events like hacking incidents. Those can really shake investor confidence and send prices plummeting.
So staying informed is key. Speaking of being informed, I'm curious about mining. What is that exactly, and how does it work?
Mining is the process that verifies transactions and adds them to the blockchain. Remember, that's the backbone of most cryptocurrencies. Miners are like the record keepers.
Okay, so they're essential for the whole system to work. But how do they actually do that? And why is it called mining?
It's called mining because it involves solving complex math problems to verify those transactions. It takes a lot of computing power.
So it's like a digital gold rush, but instead of digging for gold, they're crunching numbers?
Exactly. But it's gotten way more challenging over time, especially for something like Bitcoin. It takes huge amounts of energy and specialized equipment.
Like those mining farms you hear about.
Exactly. Massive data centers filled with computers running nonstop. It's a whole industry in itself and raises some environmental questions too, but that's a discussion for another time.
Definitely. So if someone wants to get into mining, they really need to do their research.
For sure. The book also mentions mining pools.
Mining pools.
Yeah, those are groups of miners who combine their computing power. It increases their chances of earning rewards. It's like a team effort.
Ah, that makes sense, especially if you don't have the resources to compete with those big mining operations.
Exactly. So to sum it up, you can invest in crypto directly, explore stocks and ETFs, or even try mining.
It's like choosing your own adventure.
It really depends on your risk tolerance, your goals, how much time and effort you want to put in. But no matter what, knowledge is power.
Right. Understanding the market, the tech, all the options, that's crucial.
And remember, even though crypto might seem like its own thing, it's still connected to the traditional financial world.
Oh yeah, the book talked about that, like how things like interest rates and inflation can impact both the US dollar and cryptocurrencies.
Exactly. They're more interconnected than people realize.
So we have to keep an eye on both worlds. All right, we've covered a lot of ground. Anything else you'd like to add?
Just this. Crypto is still a young and evolving space. It's exciting, it has tons of potential, but it also has risks. Do your research, be prepared for anything, and don't be afraid to adapt.
So it's not about getting rich quick, it's about taking a long-term perspective and being flexible.
Exactly. And most importantly, enjoy the ride.
I love that.
Yeah.
Well, I think this is a great place to pause for now. When we come back for the final part, we'll dive into developing a crypto investment plan and managing a portfolio like a pro. Stay tuned. Welcome back to our Crypto Deep Dive. We've learned what cryptocurrency is, the tech behind it, and different ways to invest. But now, how do we actually put together an investment plan?
Well, the book spends a lot of time on something called technical analysis.
Technical analysis.
Yeah, it's basically studying the price history of cryptocurrencies, looking for patterns that might hint at future trends.
So like using charts and graphs to try and predict where the price is going.
Exactly. It's a bit like becoming a financial detective.
Sounds complicated.
It can be, but the book focuses on some basic chart patterns that anyone can learn, like double bottoms, head and shoulders, things like that.
Those names sound familiar.
Yeah, they're pretty common patterns, and some of them suggest a bullish reversal. That means the price might be about to start climbing.
So if we can spot those patterns, we could jump in before the price goes up.
Potentially, yeah. But there are also patterns that suggest the opposite, a bearish reversal. That could mean the price is headed down.
Okay, so we need to know which patterns to look for.
Right, and the book also stresses understanding the overall trend. Is the price generally moving up, down, or sideways? That gives you context for those patterns.
Makes sense, like riding a wave, you want to catch the upward momentum.
Exactly. Now, besides patterns, the book also talks about indicators.
Indicators.
Yeah, those are mathematical calculations based on price and volume data.
Math. Fun.
Don't worry, it's not as scary as it sounds. They can actually give you some really useful insights, like they can tell you about market momentum, volatility, and even signal when it might be a good time to buy or sell.
So they're like extra tools to help us understand the market.
Exactly. A simple one the book mentions is moving averages. It helps you see the underlying trend more clearly, even when the price is jumping around a lot.
Okay, that makes sense.
Huh?
But honestly, thinking about all this trend analysis and stuff, it kind of makes me nervous. What if I make the wrong call and lose money?
That's a totally valid concern, and that's why risk management is so important. The book has a whole section on protecting your investments.
So it's not just about making money, it's also about not losing it.
Exactly. One thing they suggest is setting stop-loss orders.
Stop loss orders.
Yeah, basically you tell your exchange to automatically sell your crypto if the price drops below a certain point. That way, you limit your losses.
Ah, that's smart. But what about diversification? We talked about that earlier. How does that fit in?
Diversification is crucial. Don't put all your eggs in one basket. Spreading your investments across different cryptocurrencies can really help reduce your risk.
Right, because if one crashes, hopefully the others will be okay.
Exactly. The book also talks about dollar cost averaging.
Dollar cost averaging.
Yeah, it means investing a set amount at regular intervals, like every week or every month. That way, you're not trying to time the market perfectly.
Because that seems impossible with crypto. The price is all over the place.
Exactly. Dollar cost averaging helps smooth things out, potentially reducing the risk of buying high and selling low.
Okay, so we've got technical analysis, risk management.
hmm
Anything else we need to think about?
Well, the book also talks about the psychological side of investing.
Oh, the mental game.
Yeah, our emotions can really mess us up when it comes to investing.
Tell me about it.
Like, there's FUD, fear, uncertainty, and doubt. That can cause people to sell at the worst possible time. And then there's FOMO, fear of missing out. That can make people buy high and then panic sell when the price drops.
So we have to try and stay calm and rational.
Exactly. Don't let your emotions make decisions for you. Stick to your plan, manage your risk, and be patient.
Patience is key. I'm hearing that a
It
lot.
really is, especially with crypto.
Okay, so we've covered a lot of ground here. Technical analysis, risk management, the mental game. Anything else you want to leave us with?
Just remember, the crypto world is always changing. Do your research, stay informed, be adaptable, and most importantly, don't be afraid to jump in and explore. It's an exciting space with a lot of potential.
Great advice. Well, that wraps up our deep dive into crypto investing. Hopefully you feel more confident and ready to start exploring this exciting world.
And remember, this is just the beginning. There's always more to learn, so stay curious and stay engaged with the crypto community.
Absolutely. Thanks for joining us, and happy investing.